In addition to the choices of where to place a Fibonacci fan and how its points can be adjusted, there's plenty of choice in terms of what to combine it with beyond just manually drawing support and resistance levels. One natural option would be the Fibonacci retracement, except change its settings so the levels contrast with the Fibonacci channel levels to be more easily seen. It's the same kind of idea we covered earlier for the confluence of price and time, though in this case it's not so effective mainly because it's not an ideal situation to use the Fibonacci channel for a prolonged period, given the long-term horizontal range-bound movement, which is actually good context for the Fibonacci retracement levels to remain relevant for a long time. But at the same time, Fib channels need to be readjusted or redrawn more often to more accurately reflect constant medium to short-term trend changes. It does help there are constant sharp swing points to reference, so new Fib channels can readily be drawn without much trouble or delay. And when there's finally more decisive long-term movement, in this case a downward acceleration out of the range, we see familiar variations for applying the Fibonacci channel based on how far apart you would like the lines to be. For more detail in the short term, it might be useful to have the Fibonacci retracement and extension levels to be based on more recent movements that have price levels closer together in order to better match the proportions of shorter-term Fibonacci channels where the levels are also closer together. But that doesn't always need to be the case. One of them could be spaced further apart, such as the levels in this channel. Keep in mind, time analysis with the Fibonacci channel is only a secondary use. Fib channels will be more reliably applied in the uses we covered before, where it identifies trends more clearly during well-defined bearish and bullish periods in the market.